Well, I'm still amazed at the number of people who don't know that they can invest their retirement funds in things other than stocks, bonds, mutual funds, the things that their employer offers them. So if that's one of you, you'll be glad you tuned in today. And even if you did know about self-directed IRAs, you're going to want to stay in tune as well. We have our friend Derreck Long back on, and he's going to teach not only how self-directed IRAs work, but how you can save a lot of money and headaches doing it the right way. We'll be back in just 1 minute. Glad to have you aboard.
Real estate has created more millionaires than any other form of investing. But, how is that working out for you? Did you become a landlord and invest in rentals, expecting monthly cash flow? Only to become burned out, with all of the headaches of tenants, toilets and turnover? Are you shut out of the game by high prices and tough lending conditions? Is all of your investable capital locked up in a retirement account, and you don't know how to put it to work in real estate? Well, you've come to the right place.
All right, so welcome to episode 14 of the Stress Free Cash Flow podcast. I'm Tom Force, your host today, and it's our 2 year anniversary. This week in 2023, we launched our first episode. It's been a great journey talking about notes and financial freedom. I encourage you to go back and look through our podcast archives if you're not familiar with us and learn all about what we do. Probably one of the most well received and popular podcast episodes we did was back in March of that year, March of 2023. It's episode number 3. We had Derreck Long on. At the time, Derreck was a senior IRA analyst for Quest Trust Company, brought on a whole bunch of wisdom and tricks of the trade for investing your retirement dollars, qualified monies, Coverdell accounts. And of course, we have a bent towards notes, but there are many things you can invest your self-directed IRA in. But in the last couple of years, that we've been talking about this, I still run into people who don't know that you can use IRAs to invest in real estate. They've got 401ks trapped at past employers, and even at the employers they have their 401k at, they don't realize that generally the tenants of the 401k allow for you to take a loan out against that and invest. So anyway, Derreck has now moved on and formed Heritage IRA. Quest has moved on and been acquired by Inspira. And so Derreck's formed his own company now, and his self-stated goal is to make it the leader of education in the industry. And so what he did is he had an introductory webinar just a couple of weeks ago talking about checkbook control IRAs, and took a deep dive, brought on some experts. And I asked Derreck if I could just go ahead and use a copy of that webinar for the content for our podcast. And he said, sure, that's great. The more we spread the word, the better. So shortly, I'm going to play that webinar in its entirety. That'll be our content for today. Just thought it was important enough to play it as is. And I think there's a lot of value for you right there. Before we get to that, I do want to promote an event that's coming up on February 27th. It's the Seller Finance Coalition event. Seller Finance Coalition does a lot of lobbying in Congress on our behalf in the note business for seller financing. They do quite a bit, always looking out for our interests. And so they're having a fundraising event on the 27th. Let me bring up the slides for that here. There we go. So it's a Seller Finance Coalition event. You can sign up at sellerfinancecoalition.org/event. I'll step through here a little bit on what they're going to cover, but it's an all-day event. You'll also get the recording. We've got great speakers. It donates to a great cause, and you'll be getting the event recording, as I mentioned. 7 sessions. I'll read through them real quick. Why partials are a powerhouse of portfolio building. If you've watched any of my podcasts, especially I believe it was episode 7, where we talked about the magic math, The partials is just an amazing tool that we can do in notes that you can't do anywhere else. You'll want to see that. How wraps and sub two game. If you're into seller financing or building wealth, you need to know about this. Why you should use an RMLO to remove a lot of the guesswork. I see a lot of notes out there that are created without a professional assessing the borrower's ability to pay. If you want your notes that you're creating to be very sellable, very valuable when you try to sell them, well, having an RMLO qualify the borrower is an integral part of creating that value. So please make sure you attend that session as well. Learn alternative asset classes like mobile homes, land, and mixed use. I've got a commercial note. It pays me real well. So that's a great episode as well. How to borrow money against notes. People talk to me all the time. What happens when I run out of cash to buy notes? Well, this is the part where it gets fun, where you start leveraging your assets to buy more notes. So I'll just leave it at that. And the Seller Finance Coalition panel update and much more. They're going to talk about pending legislation, things they're trying to get changed in DC. So please go ahead and attend that. It's on February 27th. It's 9 a.m. Eastern. It's only $147. I don't know if you can read the speaker panel there, but some of those folks have been on my podcast. We got Eddie Speed, my mentor. Homero Corona was in episode 12. Ben Legg, I've done no business with him. Mike Powell, I've been to a mastermind with him. We're running an incredible operation in San Antonio. So you've got some powerhouses in this lineup. So it's only $147. Like I said, go to sellerfinancecoalition.org/event. Or if you need QR codes, I'll take a minute, let you get your phone out and get that QR code. But it'll be well worth your while. And I've signed up. I hope you do too. Like I said, you get to keep the recording forever. It's a great educational asset. So please go ahead and do that. All right, with that out of the way, let me go ahead and run our sponsors, and then we'll go ahead and bring Derreck on. Dallas-Fort Worth area real estate agent. Nobody's better than my son, Danny Force. Yeah, I'm biased, but he's got the numbers to back it up. I think those are old numbers. I got to get a new slide for 2025. Buy, sell, doesn't matter. Anywhere in the Metroplex. He goes to places I don't even know exist in this area, and we've been here for 30 years. But nobody works harder, and he's got the pedigree to prove it. So Danny at DannyForrest.com. My other son, Brian, runs Deep Blue Capital. It's a multifamily syndication. If you want to learn about how it all works, go to deepbluere.com. They're not pushing a bunch of investments. They do have a couple, but it's much more about education and being ready when the time comes to find the proper investment, just not the next investment. They also run a podcast called More Doors. You can find that on Spotify and elsewhere. You can also subscribe to it on their website. Brian also runs Homeward Property Management. In notes, we talk about having a note servicer. In the rental real estate, you need a property manager to get your time back. Nobody's better than Homeward, DFW. They're all over DFW. They're out in West Texas as well. So go ahead and check them out. You might also want to get on their mailing list because occasionally they'll have a property that comes up for sale. And if you're looking for somebody who might buy one of your rentals, go ahead and give them a shout over there as well. Hand in hand with Homeward is ProCare Home Solutions. It's the maintenance side of Homeward. They also do projects outside of that as well. So if you need somebody for your next flip or remodeling, go ahead and give the folks at ProCareDFW.com a shout. Finally, not finally, but next up is transaction coordination. Infinity Source is DFW's premier transaction coordination system and people. They've got over 1,000 transactions completed, serve over 150 agents. You can see the numbers. Give them a shout, find out how they can give you some of your time back and do it with professionalism. And finally, if you have a note and you want to sell it, tpfnotebuyers.com. Looks like I might have lost the bottom there. It's very faint. tpfnotebuyers.com. If you're looking to unload a note, go ahead and give them a shout. All right, so without further ado, I'm going to present Derreck Long. We're going to take his webinar right from the beginning, take it all the way through. It's about an hour in length, and at the end, we'll wrap up. If you're intrigued at all with what you've seen with Derreck, I'll have his contact information on there. Also, if you'd like to learn more about notes and what we do, stay to the end. There's some information on how you can learn more. Also on our website, you can go to noteclubusa.com, sign up for a free masterclass. We run that every other Wednesday. Take a 2-hour deep dive into what we do. And if you have any questions, you can reach out to me as well. So Anyway, let me go ahead and start the webinar with Derreck, and we'll get going.
All right. I'll just give everyone a second to kind of jump on. I appreciate all you guys joining today. So what's going to happen throughout this entire aspect is I'm going to probably talk for the first 15, maybe 20 minutes. But the whole purpose behind this presentation is for a Q&A session. All right. So I'm bringing in some of the best attorneys that I know. All right. Some of the best bankers that I know that I've worked with. And on the attorney side, the people I'm bringing in, I'm going to talk a little bit about them in the future, but once we bring them on. I have a lot of respect for them. And unfortunately, in the self-directed IRA industry, a lot of you guys have kind of had some hidden aspects that have been not taught to you or shown to you purposely. And the reason why is I get to make more money if I do not teach you this way of investing, right? So as we go through this, please keep this as a Q&A. You're going to leverage the chat box or the Q&A box. Either one works. This also will be recorded. So as it's being recorded, if you want the recording, please request it and we'll get it sent over to you very shortly. We did limit this class to 100 people or less because I want to make sure that everyone gets their questions answered. The end goal of this is if you're looking for some sort of entity establishment or maybe real estate guidance or advice that maybe you have some place to go to, because a lot of times you guys assume that your self-directed IRA custodian can give you that, and I can't, right? I can't give you legal advice. I can't give you tax advice or anything from those lines. So what we're going to do is we're going to start off, right? And as we go, once again, I'm calling this class the checkbook control class. And the reason I'm doing that is this is the common phrase that we utilize in the industry. It's called checkbook control. However, this is 100% a marketing term. Checkbook control absolutely means nothing. So I'm going to describe to you what people think it means, kind of what it looks like. All right. And then lastly, if this is a good option for you guys, how to finally get started. So first off, as always, right, quick disclaimer, I can't give you tax advice, legal advice, investment advice. This whole purpose of these type of classes is for educational purposes for you, the audience. This is why at the end, we're going to open it up to Q&A. Some of you guys might have questions and that probably this is not a good platform to answer them on there. Still ask them, but then I'm going to recommend that you schedule a consultation with a proper attorney, CPA, accountant, etc. All right, so use this class as a great educational tool. So knowing that, what is checkbook control? So I have a little drawing here on the screen. And before we dive into the drawing, understand that I, as a custodian, every time your IRA does an investment, I get to charge you a fee. Now, Heritage charges $100 to buy an investment and $300 a year to maintain it. So let's ignore this LLC for a minute that you see on the screen. But if the IRA bought every one of those investments you see on the far right, I would charge $100 for each of those and $300 a year for each of them. So in total, I'm making $900 a year. That's not bad. I don't mind. However, if you take your IRA and instead take an extra second and say, you know what, Derreck, I don't want my IRA to own that note, invest in that multifamily deal, take that IRA and buy that property directly. I'm instead going to have my IRA create an LLC. What happens is I have to call the LLC the investment. In this process, I charge you still that same $300 a year, but notice that LLC, I do not have to go through the motions, right, of doing anything else, right? I don't have to go through the motions of charging you any additional fees. So people like this aspect. They like this method. They really do, all right? So why? It's cheaper. It is so much cheaper on the individual client because notice I, as the custodian, don't get to charge you fees. This is absolutely one of the reasons a lot of people out there don't teach the class this way. They'll talk about it, but they don't really take the time to educate all their clients the right ways to go about it. It gives you more control. If you get more control over your retirement account, usually this means that you're going to have more ability and ways to invest your retirement funds properly. All right. So I like that aspect. Next, no forms. notice if you've ever used a self-directed IRA, right, you've had to do things like fill out directional investment forms, fair market value forms, interested party designation forms, etc. Right? Well, if you go through this process, you don't have to fill out any forms. You get a lot more anonymity, meaning you get to hide your name from individuals. Right? I like that. Last is you can actually create this type of structure with multiple IRAs. I see this as a very common tactic utilized when I have maybe an IRA, a Roth IRA, a trust, right, or an ESA, an HSA, and I want to put all of these IRAs into one big bucket because they're all smaller. So we like this, okay? Now, if you have something like this established, understand that your IRA is labeled as the members. And the way I'm going to describe it is that the member is labeled as an owner of the LLC, right? So if you take this type of method and your IRA sets up an LLC, your IRAs are labeled as the owner, not you. This means who is labeled as the manager? Who's going to manage that LLC? And this is the big question. In our industry, in the self-directed IRA industry, this has been a topic that's been debated for about 30 years now. So I'm going to talk to you about why it's been debated, the actual IRS revenue code that contradicts themselves, and then ultimately at the end, we're going to figure out who's going to be the manager, right, and why that absolutely makes sense. So let's dive into some tax, what I'm labeled as IRS revenue code. First off, we have IRS revenue code 408A. Now, this could be a couple of different things under 408, right? 408, and then the initial after that, A, K, P, that letter defines what type of retirement account. As an example, 408 little a is a traditional IRA. If it's a big A, it would be a Roth. If it was a P, it's a simple IRA, right? Now, you don't care about that, but ultimately understand that the IRA under the revenue code says that you're a fiduciary. And as a fiduciary, it's my retirement account, I have a fiduciary responsibility to make the best investment decisions possible for that IRA. Okay? Now, if we read, though, IRS Revenue Code 4975, I'm going to be very specific, Section C, subsection C, it says that you, the IRA holder, are not allowed to provide services to the IRA. Now, if we go back one screen, I'm talking about the manager, and I say, hey, you're going to be the manager of your own IRA-owned LLC. I would argue you're giving yourself the proper fiduciary responsibility because you have to provide that type of responsibility. But I have a different revenue code that is contradicting and saying that you can't provide services. And when I'm labeled as the manager, is that considered a service? So this is where we switch gears and we have to talk about actual court cases that people feel that have kind of involved this. And the first one's going to be a Swanson versus Commissioner case. Now, what I think is important about this one is it happened actually in 1999. And if you really read the court case, it didn't have anything to do with checkbook control. It really didn't. All right. This court case that happened in 99 was the IRA holder, Swanson, set up a C corporation, which ultimately he was the one running the C corporation. In doing so, that means he had checkbook control. Now, the IRS went back and forth and stuff like that, but their goal was not to target the checkbook aspect. Their goal was actually to target, was the IRA allowed to own 100% of the C corp, right, that he was a manager? It wasn't talking about checkbook. By the end of this, Swanson actually kind of, what I'm going to label as, got away with it. Nothing really bad. He wasn't labeled as a prohibited transaction. He didn't lose his retirement account or anything along those lines. So people would reference this and say, hey, look, Swanson had his own check writing ability for his own IRA. It's okay. Notice this was the court case people used for almost 30 years. 30 years. Until we had an additional one labeled McNulty versus Commissioner. And this case ended in 2022. That is a long time frame in tax court between two different aspects. So if we read the McNulty court case, what happened is the McNultys had an IRA-owned LLC, and they were labeled as the individual managers. Now, what ended up happening, if we really read and dive into it, the McNultys were doing a lot of things that was what I'm going to label as wrong. It was faulty. They were not filing proper fair market values, meaning they were falsifying fair market values to the custodian. Now, they weren't doing this on purpose. They just didn't know how to do it the correct way, right? But this is one of those problems with checkbook control. If you don't know what to do, you can get yourself in trouble, okay? This also means, though, that because they're doing that, they were storing what was labeled as precious metals inappropriately. Because they were storing their assets held by the IRA inappropriately, the IRS was actually targeting that aspect, said, hey, you're storing your assets wrong. You're reporting your IRA value wrong, right? That's what they were going after, not the checkbook control. But as you read the court case, it does have the physical language in there saying that it goes against the very nature of the IRA. So now I have a court case that almost contradicts the other one that we mentioned. And once again, we also have a court case that's kind of contradicting that aspect of who can be the manager. So notice in this specific one that's a lot newer that people need to be reciting, because sometimes we call other custodians and other custodians might say, well, Swanson versus commissioners, guys, that was 30 years ago. They got to update their knowledge. They really do. The problem is a lot of IRA custodians don't reference this one because it contradicts what they believe. Pause for effect and take a drink of coffee. So knowing that, let's talk about it, all right? How does this actually look? First off, the IRA will have to create its very own entity, right? Knowing that, it creates its very own bank account as well. Now, we're going to have a banker come on as well that's going to be able to establish a bank account for your IRA-owned LLCs if you would like to go through those motions, all right? This means that the entity structure that you chose, let's just call it an LLC for now, who is the manager? I'm going to say it's up to you. It really is. Some people will say it can be yourself because you're the IRA holder. Notice I have a revenue code that says you have to be the best fiduciary. Other people will say it must be a non-disqualified person. It says disqualified person. It's supposed to say non-disqualified person there on the screen. Right? It must be a non-disqualified person. Why is that? Is because ultimately you should not be providing those additional services. So who's correct? I don't know. I don't know. And if I ask 5, 6, 7, 10 different attorneys, I'm going to get a different answer from every single one of them. And this is why I think it's important to understand the purpose of a self-directed IRA. You yourself are the one choosing this operation. You yourself are choosing who's going to represent you at that level, right? If you go with these options that we're going to start to go through right now, then figure out, do you want to be the manager? Or are you going to assign someone else? Someone that's not you, not your spouse, not your parents, not your kids. All right. So remember, this is what the ultimate checkbook control structure looks like. It's an IRA that creates an LLC. Why do you want it? It's cheap on fees. It gives you a lot of control. Who's going to be the manager, though? That is up to you. Now, ask me personally if I have this structure, because I do. I have this exact structure where my IRA has a separate entity set up, and then we own other assets through that entity level. As we own those assets, though, I personally am not labeled my own manager. The reason I, as an individual, am not labeled as my own manager is because I teach these classes across the U.S. I teach these classes to tax attorneys and CPAs and accountants and to real estate professionals all over the U.S. I really, really do. Knowing that I'm always the one teaching these classes, I don't feel comfortable being my own manager. I want to have someone else there, so I have a non-disqualified person in there as our manager to really hold what I'm going to label as that checkbook. This way, it gives me that layer of extra protection. Some of you out there, you're going to be okay being your own manager, right? Why? Maybe you're not someone like myself. Maybe you don't hold those specific license. Maybe you don't teach people in the U.S. these type of topics, so you're more comfortable being your own manager. Once again, I'm okay with it. I don't care which way you go, but I want to educate you on both ways. I really do. So first off, pros and cons. Let's look at the pros, right, of you setting up a checkbook aspect and being your own manager. Is A, it's cheap on fees, anonymity, more control, super fast funding times because you're in control of that checkbook, and easy if you have multiple IRAs. Some of the cons, less handholding. I like to see that if you're brand new to self-directed IRAs, don't buy a semi-truck. Don't go the IRA-owned LLC route. Let someone like me hold your hand, review your investment documents, and make sure you're following the correct IRS rules and regulations when it comes to the IRA. I can't tell you if your investment's good or bad, but I can tell you if it's going to sit here and say, hey, is this following the right rules, right? You do have more scrutiny from the IRS if you're going to take this route. So be prepared for that. Setting up the entity. Your IRA custodian cannot set up the entity for you, okay? Who is the manager? Is it you or is it someone else? All right. And lastly, remember, checkbook control is just a marketing term. I stress that because we think of checkbook control as some sort of legal term. You hear people always say it and look at it and review it. But if you Google right now checkbook control, you're going to get 10 different articles. Could be anyone from Jeff Watson or Quincy Long or John Heyer or Matt Swanson, right? Or John Bowen. Each one of these people are highly respected in the IRA and self-directed IRA industry, and they're all going to give a different opinion on that. So checkbook control is just a marketing term. Know your IRS revenue code and work with professionals, all right? So knowing that, what I'm going to do is I'm going to stop sharing my screen, and we're going to bring on our attorneys, and we're going to bring on our bankers as well, all right, that will get these established. So let's start with Brent and Laura. Are you there? Awesome. So I'm going to do a quick introduction for Laura. Laura is very unique in the aspect that I'm going to argue, is probably one of the best contract attorneys we have here in Texas. She's dealt with every type of contract you can imagine, especially when it deals with real estate, from probate issues, right, to foreclosures, to anything else. And that's why I really wanted Laura on here. Brent, on the other hand, Brent is a problem solver. And I think that's unique because a lot of times we don't know what the problem is. We're going to have to describe a situation to someone like Brent, and Brent is there to come up with what I'm going to label as unique solutions. And he's there to solve the problem. So I'm going to take a minute, and Laura, maybe just introduce yourself, talk for a second. Brent, take a minute and talk yourself, and then we're going to turn it over to Q&A. So everyone out there, get ready for your Q&A.
Good afternoon, everybody. I'm Laura Hall. Like you said, I've seen a lot of contracts, and the worst kind of contract is the one that I don't see until after you sign it. So always keep that in mind, because there's not a lot I can do after you've already signed the name on the dotted line. So that's kind of what I'm here for, and I'll turn it over to Brent to introduce himself.
Hi, I'm Brent Dore. I'm one of the shareholders at Dore Rothberg Law. We've done work with self-directed IRAs and the IRA custodians in some form or fashion for probably 10, 20 years now. We got to know Derreck and other members who had been at Quest Trust before. I think Derreck said it best when he describes the problem solvers. A lot of lawyers are going to sit there and tell you, how not to do something, and sometimes that's what you're paying me to do, is to tell you no and tell you that's a bad idea. But generally speaking, we try and approach it from a business perspective and help figure out a way to get you to yes. I definitely am not an expert on every nook and cranny of some of these issues, but I'm really good at getting Derreck on the line or somebody else and working through those questions. There are a couple of points I wanted to add, and again, I preface all of this by saying, this is informational purposes only. We would be glad to work with you to get a LLC set up for this purpose. What we are offering is we do our LLC formations on a flat rate of $2,000. That includes your certificate of formation, your filing fees, your corporate minutes, your company agreement. I think that's it. All in one spot. If you attended this and connect with us, having attended this, we'll give you a 20% discount on that. And if you sign up within a week, so by
Well,
next Wednesday,
yeah, we'll
we'll
talk about some of those things too, because we're gonna get everyone on here to get that.
Oh, perfect. Yeah. So if
Yeah.
you sign up, yeah, we'll give you a 30% discount instead of 20. So anyway, a couple of things about LLCs and this particular thing that I want to flag. Laura said it best. Please, 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 please run your contracts, run your agreements by an attorney. I have seen a lot of good self-directed IRA deals that have turned out to be very lucrative for people. And I've seen some that have been complete disasters. And without a doubt, the ones that don't go well, almost uniformly, it was going bad from jump. How? Typically not no due diligence. Typically it'd be promissory notes that are downloaded from the internet that are not really secured, that don't really provide any kind of recourse. It's fraudsters who are doing something that just with a little bit of due diligence would have probably been discovered. So let us take a look at it. I know it can be a pain. I don't want to pay my lawyer a couple $100 or a couple $1,000 to do this. I guarantee you it's going to cost you a heck of a lot more when you come to me and say, I need to sue somebody or I need to go after somebody because my security is not where they said it was, or whatever the case may be. So I can't, whether it's me or somebody else, please have those contracts reviewed. And don't just assume that I can go on LegalZoom and set up an LLC
God.
there, and that I can do that for $400. Why would I just do that? A standard LLC is not going to have some of the nuances that you need to have for these types of deals. And Derek probably mentioned it before. If you screw up and you don't do this right, and it becomes a prohibited transaction, you lose not only you get penalties from the IRS, about the IRA, but you can also lose the entire investment, and it's just not worth it. Again, ounce of prevention is a lot cheaper than a pound, whatever the pound of headaches, whatever that saying is. So just again, always take a look at those things. I've seen these checkbook control, whatever you want to call them, LLCs work really well, but when they do, it's because they were set up well. The folks understood what they were doing. They have a good advisors around them, like Derek and like some of the people he works with. Some folks might ask, couldn't I just set up a trust as opposed to an LLC? There could be reasons to do that. Generally speaking, we don't recommend that. It's a lot easier when you go into banks and stuff to get a bank account set up for the LLC lots of times. Also, a trust is likely not going to have the same types of liability protection and ease of use that LLC will have. So that's why we typically stick with LLCs when we're talking about these things. Obviously, trusts are very useful for asset management, estate planning, all kinds of stuff in certain contexts. But when we're talking about this very, very, very niche area, LLCs are the way to go. So again, these are always really interesting. I appreciate Derek letting us be a part of this. I'm proud of our team at Dory Rothberg Law. And we look forward to working with Derek and his crew, and also any of y'all who are interested as well.
And Brian, I should have a gentleman by the name of Brian on here. Brian, if you're on here, if you turn on your camera, I want to introduce you as well. There he is. Hey, Brian.
Hi there.
All right, so guys, the reason I also want to bring Brian on here is ultimately I would love to see, and I know this sounds weird because I get to charge less fees, but I'd love to see each and every single one of you use your IRA, establish the proper entity that makes sense for you, all right, and then have that entity go out and purchase your IRA-owned assets. It will save you guys money, and I think you guys will be a lot happier. The problem is sometimes when you go through these motions, and Brent just brought it up, is, well, where do I get the bank account from, right? Who should I go with? So I purposely wanted to bring Brian on here because that's actually what Brian's here for. And Brian, you're the vice president, is that correct?
Yeah, I'm a vice president in our self-directed team at Fortis Bank. We're a bank in Denver that specializes in services to self-directed retirement plan holders with IRAs and individual 401ks. And we're fine if an IRA is investing in an LLC or a trust. We've seen this duck, right? We know what it is, and we don't get confused. I agree that in some cases you walk into your local bank with an IRA owned trust and they're wondering, what the license plate on your spaceship is. But no, we work with folks like
I've never heard that phrase. I like that.
We've worked with folks like Derek over at Heritage and throughout the industry in creating banking services that are really well suited to investors in this space. We understand the space. And we're also very technology forward, so working on tools that just integrate and simplify the process. One of the things Derek didn't mention about these checkbook IRAs is it's three pieces, right? You got your IRA with your custodian, you got your attorney doing your LLC, and then you got a bank. And if you're cobbling all that together yourself, it's a lot of work and it takes a lot of time to get set up. It's easy to use once you get it in place. And if you're working with good partners, they'll walk you through the steps. But it's all these different pieces. And the more integrated those pieces are and the more your partners are working together, the simpler it is, the faster it comes together. And that's a huge advantage.
So on those notes, right? And I just want to make sure we kind of go through every single person's question. So we're going to start with some of the easy ones on here, right? Someone has two self-directed IRA custodians managing a couple of different assets. So they want to move it into an IRA-owned LLC. So step one, guys, is you would have to establish an LLC, right, in this aspect and decide, are you a good fit to be the manager or do you want to assign that non-disqualified person? So Laura, if someone wants to take that first step and establish that LLC first, how long would it take for you guys, once you do a consultation with them, to create those LLC documents based off what they need?
So not to be the attorney, but it depends. It depends a lot on how well we work together. And what I mean by that is basically they have to come up with a name that they want that's not already taken. And sometimes that can take a little bit, but as long as they're responsive with me, it's a very quick process of we first submit what's called a certificate of formation with the Texas Secretary of State. And once that's approved, I can draft the company agreement and the organizational minutes like Brent mentioned. And once that's done, it's really a matter of them reviewing it and inserting their own preferences for those documents. So the process is fairly quick. It only takes a few days for the state to approve the certificate of formation. But where the wiggle room comes in is how quickly can we come up with a name that they can agree on? How quickly can they review and approve those documents to me so that I can get them filed and that they can get them signed? So that's why I have to have a little wiggle room in there, because it is a bit up to them.
So I love that, right? So now that we got the IRA and set up the LLC, you worked with Laura on that aspect. Brian, how quick can your team get the bank account established for that LLC?
Yeah, we can typically get an account set up in a day. So oftentimes same day.
I've seen your team do it pretty fast. So yeah.
We've really worked on the technology side of being an internet-based bank and being able to do applications online. We've facilitated a process where your team at Heritage can help the client, right? So stepping back a little bit, what happens is somebody sets up the IRA with you at Heritage, right? And then they initiate funding or creating the LLC, working with the folks over at Door. In the interim, they can work on funding their IRA, right? Because the money doesn't go straight to the LLC and straight to the bank account that we're going to set up. It first has to go into the IRA, and then the IRA is going to invest in that LLC through what's called a bi-direction, right? And that's basically like you're telling Derek and his team, hey, to have my IRA, buy shares of this private fund, right? And it's that transaction that will then send the money from the IRA out to the LLC. Well, the LLC's got to have a bank account. we can work to just sort of integrate that process where the buy direction and the account opening are facilitated through Heritage. And when the money lands, they'll know it needs to go out to your account that you've established at Fortis for the LLC.
Love it. Now, once we have that established, so notice for if you're the client, step one was you establish the LLC. Step two, you get the bank account. Now, any of those investments that you currently have, they'll have to be redrafted, right? Those investment documents, depending on what they are, to show that the new owner is the name of the LLC. As an example, if my IRA owns a property directly, right? I have a warranty deed in the name of the IRA. I'm going to have a new warranty deed filed with the county showing it's now owned by the LLC. If it's a promissory note, right, then it's usually an amendment to the note showing that. If it's a subscription agreement for a multifamily, etc. Now, I always tell people, ask me directly what it is. As long as you're one of our clients, right, we'll work with you every step of the way and make sure that you get that established. So now we got questions coming in. See, everyone was scared at first. Now they're blowing up. So we're going to go to this one. And I'm just going right down the list, guys. So it is an assignment of mortgage used to change from a personal name to a self-directed LLC aspect. So guys, in that question right there, and I describe this all the time this way, is you are a taxable entity. You make profit, you pay taxes. So if you own a note personally, you can never assign it to your IRA or an IRA-owned LLC, right? These are two different buckets. The IRA is non-taxable. The IRS would never let you move an asset that they're taxing you on to a non-taxable side. So it'd be nice if they did, but it doesn't happen. I have an LLC tied to my self-directed IRA. I have a private money lender, a non-disqualified person. Can I get a pledge, a note to a private money lender? I've always been told this triggers UBIT. So one of you guys want that, or you want me to tackle that? It does not trigger UBIT. So Wayne, I understand why people are thinking that. So the IRA only triggers, and it's not labeled UBIT, it's actually a subsection of UBIT called UDFI, or Unrelated Debt Finance Income Tax. This is when the IRA borrows money, not lends money, okay? So don't confuse these two type of things. So if you have someone that is willing to lend your IRA money, absolutely it brings on UDFI. But if your IRA is providing the loan, that does not apply that way. Okay, so kind of flying through these. Wayne, oh, I can't see because this looks like I have an LLC tied to myself. I have a private. Oh, I think we just did that one. Sorry, the picture. Is the LLC required to pay taxes? And if so, are that quarterly, annually? So, Brent, what do you think? The IRA owns an LLC. Does that LLC have an annual tax reporting it has to do?
And I don't know. This is when you probably want to talk to your CPA and stuff. If there's,
I've always said no. All right.
Yeah.
And this is because the IRA doesn't pay taxes on an annual basis. And remember, the IRA is the one establishing it. Since the IRA is the one establishing it, the LLC kind of falls in the same tax bracket. So the LLC doesn't. Now, it doesn't mean it doesn't file, and I call it a franchise fee or whatever it is to keep the LLC active on an annual basis.
Yeah.
And in Texas, is that $80, $75 a year or something?
I think it's like that. You would still want to make sure you're filing, and you also, there's an annual report that LLCs have to file in Texas, so you want to do those things. They're super simple, but you want to do those things in order to make sure that it's, your entity is in good standing, maintains, liability protection, all that kind of stuff.
So I got this next question from a client of ours named Bob, but he says he has an LLC sitting dormant right now. Can he use that same LLC and just change the members of it to the IRA? And I've always been torn on this, but I've always said that, look, talk to an attorney, and then most of the time it's going to make the most sense to establish a new one underneath the IRA's name. But I'm going to turn it over to, Brent, Laura, Brian, you guys have any comments on that?
I think it's pretty simple just to start up a new one. It wouldn't save you much, because if you're coming to us and needing to change from a dormant one to a new one, the fees are gonna basically be the same. I think you could do it. You just need to, you have to amend the certificate of formation, amend the green, lots of things like that, and it's probably not worth the hassle. If you just have a dormant LLC, you could just dissolve that and start fresh with a new one that's set up that won't trigger any kind of concerns with the IRS or anything.
Yeah, I'd take a harder line on that because you can't transfer, assign, or sell an asset that you own to your IRA. And if you set up that LLC where you were the owner, you're basically selling or transferring that to your IRA, and that's a risk that's not worth saving the couple $100 for the new filing fee.
That's a very good point, Brian. That's a very good point. Yeah.
I love it. I love this. So I got a question from Tanya, and I think this is great because she's like, hey, look, I have a trust. The title company should they make the check payables to a trustee, or should the title company make a check payable to the trust itself? And she gets a lot of different and confusing answers and those type of things. In these type of situations, this is one of the reasons I like to work with LLCs over trust. Now, I know a lot of us out there have been taught to use a trust. The problem is you've been taught this by people that have probably been doing this for 20 years in one way. Notice, if I'm going off the Swanson versus Commissioner case from the 1990s, right, and I haven't updated the way I actually do work, right, then that could be an issue, all right? So I would argue that, you probably always want checks made payable to the entity itself, as the entity is the one doing it. Any thoughts, Brian, Laura, Brent?
On the trust, they're effectively interchangeable, right? Because the trustee acts on behalf of the trust, and the bank would accept a check, whether it was written to the trust or the trustee. You would want it to be clear that it's to that person in their role as trustee, not just to them as an individual. So the entity's preferred, but if you got one made out to the trustee deposit, you probably want to go to that person and ask them to issue future checks. But I wouldn't, like, if I got one made out to the trustee, I wouldn't bother to get it redone.
Yeah. I mentioned the term, I said franchise fee earlier, tax fee, and one of our Paul was like, hey, what? There's a franchise fee for an LLC or something like that in Texas. That's not what I meant. What I was saying is, like, you have to file every year, and I call it a franchise fee. I don't know if that's even the correct term, but to keep the LLC active. Don't think of it as a tax. There's like a fee that Texas has you file every year. California has this, right? It's $800 per LLC. I think most states have that. In Texas, and I'm saying it's $75, $80. It's something cheap. What is the difference between a self-directed IRA with LLC checkbook control aspects and a solo 401k with the same thing? So when we have an IRA, all right, an IRA is always going to be tied to a custodian, right? And as a custodian or an IRA administrator, right, then there's someone there that's supposed to hold your hand. So when they give you the LLC, what they're really indirectly doing is saying, hey, even though I might be the administrator or the custodian, I'm not going to hold your hand anymore. And I'm kind of passing that off to you, right? Whereas the solo 401k actually comes with this type of checkbook access where you're labeled as what we call the trustee. So knowing that you do not need to establish an additional entity such as an LLC if you're establishing a 401k. And Brian, you set up bank accounts for solo 401ks every single day too, right?
Oh yeah, absolutely. The key difference is, an IRA is an individual account, and a solo 401k is just a different type of retirement plan that's designed as a qualified employer plan, a 401k for an owner-only business, and they have different back end features around contributions and tax treatment of money, traditional Roth, things like that. But at the end of the day, as investment vehicles, they're very similar.
Love it. Brent, Laura, this question's for you guys. It's from Doug. He says he's looking to retire. He wants to protect his assets. Should he use an LLC or a trust? How should it be formed? Those type of things. So Doug, no matter what, I'm going to highly recommend you at least email Brent or Laura and schedule a consultation with one of them. But what are some great ways that you guys see people protect their assets as they get older?
Yeah, that's I'm answering this kind of separate and apart from self-directed IRAs, though in some, both trusts and LLCs can work. It really depends on the type of asset you're talking about. If it's, retirement accounts, cash, that sort of thing, it's a different discussion than if you own a bunch of rental properties and you want to make sure that you're protected against like a slip and fall type of claim, that sort of thing. but both trusts and LLCs can be very useful. The type of trust varies. A revocable trust, that's the most common. Might also, living trusts is a lot of times how you might hear them referred to. Those are great for organization, for avoiding probate, for putting lots of assets in there, including membership interest of an LLC. But it doesn't necessarily provide you with the same level of asset protection. And it likely wouldn't help on the state taxes either. But if you put it in an irrevocable trust, you lose control of things, but you do gain an enhanced level of asset protection, creditor protection, and potentially even some estate tax benefits as well. So lots of options there. We do trusts and estate plan like that in many different forms. Lots of it can be done. It's all very customizable. A lot of it can be done on a flat rate basis. And Laura or I would be happy to sit down with you and kind of get more into specifics of what you've got going on.
So I got a question from Anna. Might be Anna, but I think it's Anna. She says, can I transfer an asset that is subjected to UDFI tax from my IRA to a 401k because 401ks are exempt from UDFI? And the answer is maybe. All right. So, and I'll kind of give you a couple different scenarios real quick. Is the IRA, remember, is subjected to UDFI when it is borrowing money. This means directly or indirectly. The most common scenario I see is the IRA invests in one of those syndications, multifamily, storage units, senior living facility, etc. Right? It's an LP and you invested in that deal. Now, if I'm in it year 1, year 2, possibly year 3, right, most likely my IRA has not made any profit. Right? Since it has made any profit, you shouldn't be paying a UDFI tax. You still file a 990T, but you shouldn't be paying a tax yet. We pay UDFI taxes on our profit. So when do we make profit is at the end of the investment. So if I take my IRA investment year 1, year 2, year 3 in our example, and I move it to a 401k, yes, in that example, the 401k will then pretty much say, hey, listen, guess what? There is no more UDFI taxes owed. I've seen this done all the time. However, 401ks are still subjected to UDFI tax if the loan is not held for at least a year and 1 day. Meaning, I've seen people try this tactic where hey, I got my investment, it's paying off tomorrow, I want to move my IRA to the 401k. Well, guess what? The 401k didn't hold that loan for a year and a day. So because of that reason, it is not exempt from UDFI. So the better question is, can it be done? Yes, but realistically, you got to figure out, hey, how long is that loan and how long is that investment in place? When is the payoff, etc. So feel free to call me if you have questions on that. Once the LLC and the bank account is set up, what is the next step to officially move the IRA-owned asset to the LLC? What documents must be recorded? Monica, that's going to depend on what the investment documents are. As an example, if it's a physical property, a new warranty deed. If it's a note, a new promissory note, or an amendment to the promissory note. So we look at that on an individual basis. I'm starting to go really fast, guys. So I want to make sure I can try to get to all your questions. So will you be discussing the fees associated with setting up the LLC and bank account? Absolutely. So guys, and Brent, you guys set up an LLC for myself, and it was probably about 5 or 6 years ago. And I want to say at the time, you guys charged me $2,000 to set up an LLC. And I believe you guys still charge that. Is that correct?
Yeah, we still charge for your standard LLC $2,000 flat rate. That comes with your certificate of formation, your corporate minutes, your company agreement, all your filing fees included.
Okay. And now, if they're choosing and they're one of my clients and they're coming from this, they're on this webinar and they're looking to set up an LLC right now from this aspect, you guys are going to give a 30% discount, which is $600 off. So you charged me more than what you charged, you're going to charge them. All right. But $600 off. All right. But they have to at least reach out to you when, because you're not going to keep that permanently.
Yeah, we'll get by next Wednesday. So if you connect with us in the next week and get signed up and get this moving, then we'll give you 30%. If you don't want to do, if you're still on the fence and you contact us in a month, but you came to us from Derreck, we'll give you a 20% discount. But extra little perk is move quickly, and we'll get you set up and rolling.
Yeah. And so should they email you or Laura? I think Laura, right? Is that okay?
Yeah. In both Laura and I, our emails are in our profiles, and I know Derreck will circulate our contact info. I'll drop it in the chat as well. But contact either one of us. Laura is really the one who will be doing a lot of the work, getting everything done. But I'm happy to connect you and move it on down the line.
So on that note, right? Once again, guys, I'd love to see everyone kind of go through those motions. I really, really do, because ultimately I know for a lot of clients this will make sense. At the same time, I make more money. I get to charge more fees if you don't go through this LLC method, right? And if you're someone out there and you're like, Derreck, I don't mind the hand holding. I don't mind you working with me on every single thing and reviewing our investment documents and having your team look at that, then don't go through this process, okay? Now, once we have that LLC establishment of that, Brian, your firm doesn't charge any fees to keep the bank account open, do they? Or do you have an account minimum? Or
no, there's no minimum balance on the accounts. There's no account level fee, so no monthly fees or annual fees on the account.
Yeah, but I mean, there's always going to be like a wire fee, right?
Yeah,
like
the normal fees are inbound, outbound wires. Honestly, in this instance, that's really about all people are going to run into. You're not walking into a bank and getting a cashier's checks. We can produce them via mail and send them their nominal fees for stuff like that. But mostly the only thing an investor is going to run into is wires. ACHs typically don't have fees. You might want to go buy yourself a checkbook, right? We can get them for you. You can go to Costco, whatever. But it's going to be a very low cost account.
So I got an interesting comment from one of my clients, right? And he says, and I'm just going to throw it out there. And he says, hey, there should be no pressure, on that 30% discount. But I disagree. All right. And let me explain why I disagree with that. You realize what Laura, Brent, and Brian's time is worth. It is costing them several $1,000s to take the time and sit on this meeting with us to answer questions live, right? I ask this as a favor, right? You realize you have two attorneys and the vice president of a very large corporate bank out of Colorado, right, taking the time out of their day to spend and answer your questions, all right? And it doesn't matter if you don't want to work with them or not, right? It really doesn't. I don't care which group you want to go with, but a lot of times people are looking for the best deal, the best rate. So I'm going to go to LegalZoom, and LegalZoom's going to only charge me $50 to do this. That's fine until you get hit with some sort of charging orders, a lawsuit or something like that, and you don't have the right language in there. Okay. So you might disagree with me. I asked Brent and Laura if they would give some sort of discount from that aspect, because I want to make sure that you guys are being taken care of. If you don't want to rush that aspect, don't. Pay the $2,000. That's fine. It really is. So knowing that, I got a unique comment on here, and it's a question. It says, just curious, is there any inherited advantages to using a Texas LLC, which most of the clients on here are here in Texas, all right, versus using something like a Wyoming LLC? And the reason the client asks this is they specifically live in California. And there's a lot of groups out there that will teach, though, you should set up a Wyoming LLC for charging order reasons and stuff like that. So, Laura, Brent, do you have a comment on that? Like, would you set up a Wyoming LLC over Texas LLC? The guy lives in California. What's going to make the most sense?
I mean, for me personally, and Brent can disagree with me if he wants, but if you're in Texas, I typically suggest a Texas LLC. Because it's like, this is where everything is happening. This is usually where the, either the IRA or the property or whatever matter that you're handling through the LLC is. So it makes the most sense. In past years, there were advantages in other states. Like for a long time, Delaware was a very popular state because of tax reasons. And again, we always recommend people have a CPA and accountant working hand in hand with their attorney to kind of guide them through certain tax issues that can arise when you're forming these entities. But yeah, for me, typically if what you're working on and everyone is located in Texas, it makes the most sense to form a Texas LLC. And like you said, our fees in the state are nominal. So versus like California, I know a lot of their fees are a lot higher, and a lot more stringent regulations for certain things. I'm not a California attorney, but it's just a general comment on California. But yeah, typically I would recommend a Texas LLC. I'm not licensed in Wyoming, so I'm not sure. I haven't heard about any special advantages of forming in Wyoming lately, but they should definitely consult a Wyoming attorney if they think that might be to their best advantage. But typically it's going to be Texas for us.
On that note, I always get this question a lot. And you're going to hate me because you live in California, all right, the person that asked this question. But as an example, I live in Texas. Therefore, my LLC is filed in Texas. My assets are in Texas. I personally work in Texas, so I file taxes in Texas. So why would I set up a Wyoming LLC, right? And if I'm a litigation attorney, not a document attorney, right? And there's some reason I was going to try to sit there and I'm going to label pierce that veil. I'm going to present to the judge that you're hiding something, right? And here's why. You live in X state. Your assets are in X state. You do everything in this state. Why did you go out of state to file that? Now, I'm not an attorney, so I think there's a strong argument that some people might make against it. But ultimately, just you living in California, I'd even argue that maybe you want a California LLC. Once again, that is not advice, And I think if you ask 10 different attorneys, you'll get 10 different answers. So
yeah, I'd also say on that, there has been a lot of, and it's probably was getting this question asked, is there has been a lot of talk in recent years about the benefits of filing in Wyoming. The number one being they are allowing a lot more. They're not requiring as much disclosure on who owns things, who doesn't own things. A lot of entities. A lot of companies have been opening their shell companies based out of Wyoming. I'm not a Wyoming attorney. I can't form them there, but what I would say is, if that level of obfuscation, confidentiality is important, there may be a reason to look at that. I will say it is a pain in the rear when we have to go and find local counsel in Wyoming to help us with legal issues in Wyoming. There are not very many attorneys in Wyoming, and that's a challenge. So if you did run into legal issues, we do a lot of work in the oil and gas sector, and so there's oil and gas in Wyoming, and it's hard to find good local counsel in Wyoming because there's just not that many attorneys in the state.
Yeah, I'd like to go to the heart of this one, and I'm not an attorney, but I've been around this space a long time. The goal is to avoid California franchise tax. California defines nexus as if you're controlling the entity, it's doing business in California. So I actually had an opportunity to do business with a gentleman who worked for the California Franchise Tax Board. And he set up a Nevada LLC, and any time that he needed to engage in any business through that LLC, he went to Lake Tahoe and crossed the state line and operated the LLC from Nevada. That's how he obfuscated it. But for most people, you're not going to avoid California franchise tax implications.
So we got a couple other questions, guys, and we only have about 3 to 5 minutes left, okay? So I know I got a lot of them in here. I didn't get to all of them. Joe, I saw your question. Joe Vonador, call me. I'll work with you on that one. That's a complicated one. I don't want to confuse people on this on hypothecation. Most people don't even know what that means. So the Corporate Transparency Act. Do you guys have any comments on this aspect? Because it's been coming up a lot lately. And Fred's over here laughing, and Laura's going, oh, God.
All right, well, I'll do it real quick. The Corporate Transparency Act is currently stayed, which means it's paused, pending the Fifth Circuit, which is the appellate court, federal intermediate appellate court that covers Texas, Louisiana, Arkansas, Mississippi. Anyway, covers that region of the country. The appeals should probably be ongoing in the next couple months. The Supreme Court kicked it back to the Fifth Circuit last week. My take, just file the dang CTA things, and so you can ignore the rest of the all these stupid deadlines and will they, won't they enforce it type of thing. I do think a CTA filing would be required for this type of LLC. Virtually every entity out there is like, with some exceptions, but most entities are going to need to file one, assuming. But the other thing is the CTA, the FinCEN database that's being created is confidential. It's not a public one. It's not like the like Secretary of State filings and things like that. So my take is just file it. We do those on a flat rate basis too. They're very simple. You can do it yourself, but there are a couple tricks, a couple of steps that can be a little confusing, and some clients just don't want to deal with it. But that's my take on it. I think it's kind of a dumb rule, but it is a rule, and we're still kind of monitoring it as to when or if it'll go fully into effect.
I like Brian's thumbs up. So guys, I still got a lot of questions in here. I want to kind of end this type of talk and just be fully transparent with everybody on here, okay? Is if you're looking to set up a checkbook control LLC, all right, look at groups like Derreck Long. I personally have used them, and not just me, but even my uncle and my family, if you know who they are, for probably close to 20 plus years. And Brent, I know that my family's doing business with your dad, right, all the way back in the late 90s, early 2000s and on. And we've been with you guys since, right? The second thing is, once you get these things established, reach out to Brian. Brian, what's the best way? Who do you want them to reach out? Because I doubt they're going to reach out to the VP. But what's a good way so they can get the bank account established for their IRA-owned LLCs?
Yeah, well, we'll work on getting you some materials to incorporate that with your investment direction, your buy direction.
Okay,
will probably be the simplest and the best to do it. But yeah, as you're setting up your plan and working with Heritage, just reach out and get it. I mean, you can certainly just go to fortisbank.com, but it'll be more integrated if you go through Heritage.
I like it. And then, guys, if you already have assets and we have not transferred your cash or your assets over, what's great is some of you guys out there, you realize that if you go through these motions, we can transfer the assets from your current custodian directly into the LLC that's been created. I won't make as much money, right? And you and I together will have to jump through some hoops, but this is why we want to teach this. Heritage IRA wants to make sure that we're known as the #1 educators in this space, helping every single one of our clients. So on that note, what I'm going to share my screen real quick again is a lot of you guys were asking for the recording. Everyone will get the recording, so don't worry about that. We are doing an in-person meetup in the Heights in Houston, if you know where that's at. It's going to be a big deal pitching aspect, but this will be by invite only. I'm limiting this to 50 to 60 people if you would like to come on February 12th. So what you have to do is email me directly. We're going to have an in-person meetup, right, where there will be deal pitching. We're going to teach a small class, something very similar to this. It'll probably last a couple of hours. Drinks will be provided and maybe some minor snacks, like some little foods and stuff, but it will be on February 12th from there. My email is right here. My phone number is here if you guys need to get a hold of me, right? It's also just on my name. But before we kind of close it out, Laura, Brent, you guys have any last minute comments? I want to make sure people reach out to you, get those IRA-owned LLCs established, and then Brian, we're going to end on you. So Laura or Brent, you want to go first?
Sure, I'll go first. Just first, thank you for your time. Like Derreck said, we're here volunteering our time because we do think it's important for you guys to get a chance to see us and hear from us. And that's why we offer initial consultations so that people can see if they're a fit with us. And we hope that some of you are. So it was very nice to speak with you.
How much is that consultation?
initial ones are generally free.
So
Yeah,
a free consultation with some of the best attorneys in Texas.
that's right.
I will preface, when we're talking about consultation, we're talking about, like, it's it's not hours upon hours. Usually, it'll take about 15, 20 minutes to kind of get to the root of the issue, get an engagement letter put together with you, and then get moving.
Awesome.
Right.
Brian, go ahead, Laura.
Oh no, I was just agreeing with Brent. We want to get connected with you and get you signed up. That is our goal.
And guys, one final thing too before I turn it over to Brian is you realize that I didn't seek out to start Heritage IRA. Most of you guys that are on this already, my clients, been my clients for up to a decade in some cases. And Brian here with his bank, Fortis Bank, if you look at your vesting name, if you notice, it doesn't say Heritage IRA for the benefit of, it says Fortis Bank FBO, right? So Brian and his team have actually been a huge help in helping us get off the ground from this level to make sure that you guys as clients are being taken care of from every level. So Brian, any last minute thing before we close it out?
No, I think this has been a really, I've seen a lot of these. I think this has been a good conversation on the topic. Checkbook control is great for certain types of investors and certain types of investments. Direct custody through Heritage is good for other pathways. So, you've got the advantage of, a group of people here who know their way around this space and are experts and can help you decide what fits your specific needs. And depending on which path you go, there's the ramps to get it built and get you up and running. And especially when you get the folks at Door who, forming an LLC is one thing, operating it and paying attention to the details as you put that to work are really the more important piece. So having the whole team is just invaluable. This has been great to see what's being put together here.
All right, guys. Well, on that note, I still see other questions coming in. Send me an email, send Laura an email, Brent an email, right? Our emails are right there on the screen, and keep it up for one more second. Don't forget, if you want to come to our in-person event on February 12th, to send me a private email. I'm only allowing 50 to 60 people there. Okay.
Well, hopefully you enjoyed that. Derreck's the real deal. I always learn something when I watch something of his, and that's the idea. Is there's a lot of good information out there. We just want to get it to the folks who want to use it. So if that intrigued you at all, please go to our podcast archives at noclubusa.com. Go to podcast and scroll down to number 3, where Derreck and I take a deeper dive into the granular aspects of self-directed IRAs and the things you can invest in and how that works. So if you have any questions for Derreck, reach out to him. He's growing this business, and it's going to be a powerhouse in the industry. And he wants it to be the most educational company as well. So we're happy to help him out in any way we can. So as far as education, if you're interested in notes at all or want to find out more about what we do, go to noclubusa.com. Go to the upper links. Click free masterclass, sign up. We do it every 2 weeks, every Wednesday at 11 o'clock. It's every other week. We just had one this past Wednesday. The next one, I believe, will be the 19th of February. But go ahead and sign up. And if you can't make that, sign up and get the recording. We want to make sure you know what we're doing and how notes work and spread the word. So until then, hopefully we'll have another episode in March. I'll be going away on vacation here for a little while, but if you like the episode, go ahead and let us know. If you have ideas for an episode, let me know. You can reach out to me at the podcast link as well. But until we see you next time, stay well and invest wisely. Talk to you later.